what is the difference between conventional banking and Islamic banking?
Profit and interest.
Profit and interest.
Yes.
What else?
Islamic banking is riba-free banking.
Okay, yes.
Conventional banking is
Interest based. Interest based, yes. So, the Arabic term for interest is
Riba.
riba. Yeah, interest is riba. Okay. Now, what about, do we have loan with Emirates Islamic?
No, finance.
Yes, we do not have loan. We have finance. Okay? Now, what is the difference between a loan and a finance? Of course, we keep on saying we don't have interest, we don't have we have profit. We don't have loan, we have finance. But what is the difference? Is there a difference? Yes, there is a difference. And what's the difference? Agreement contract, which is murabaha. Yeah? So you have to know the difference because customers does not know the difference. They think loan is same as finance. No, it's not. It's two different things. Okay? Loan is basically lending. Yeah? Money on top of money with interest. Okay? In Emirates Islamic, with an Islamic finance or Islamic product, we do trading first. Okay? So there's a lot of different things that you would understand, that you would get to know once I show you each and everything from here. So, I'm going to show you Introduction to Sharia, the difference between Islamic and conventional banking, Sharia fundamentals, Sharia products that we offer murabaha with, and Sharia governance framework, the framework itself. Okay? So here also, under Sharia fundamentals, we have the things that are supposed to be avoided in an Islamic finance. But there are more actually. Okay, which I have another slide that you guys would see. Okay? So we should be avoiding, or we should not sell our products if there is what you call this? Haram transaction on it. If there is a kimar, if there is a garar, if there is riba, if there is jahala, these are the things that should be avoided. If one of these are there, we cannot sell the product to the customer. You'll understand why. What is Islamic banking?
Introduction to Islamic banking. Islamic banking is a system which follows with the spirit, code and value system of Islam. Islamic banking is governed by Islamic law or otherwise referred to as Sharia. According to Sharia, transactions involving riba, interest, gharar, ambiguity, uncertainty, and mazer gambling are prohibited and forbidden and considered haram in the eyes of Islam.
Alright? Any transactions involving riba, which is interest, we do not have it with Emirates Islamic. We do not have it in an Islamic bank, technically. Garar means either ambiguity or uncertainty. But the easiest way to remember garar is uncertainty. Okay? What is uncertainty?
The period of time is not fixed.
The period of time that is not fixed, yes, or something that is not that there is no assurance.
Like a reducing balance?
The
Reducing balance?
rates are not.
Like a reducing amount in personal finance?
Not technically.
Suppose the EMI is not fixed, they have to minimize or maximize any time.
No, not related to
Interest.
rates, not related to rates, but basically garar. How many of you guys are familiar with pre-selling?
Cross-selling.
Pre-selling. I also do pre-selling when I was in the gym. So pre-selling, you're gonna tell me, okay.
What's this?
Buy real estate. You know real estate, they're selling the unit flat already, even if it's not yet fully built. Yeah? So that's pre-selling. And he's selling it before, in advance, selling it in advance. So in the gym before, we also do that. Even if the gym is not yet built, we're already selling the membership. Okay? That's considered as garar. There's no certainty because what if they lost the budget in between? Yeah, what if the building does not finish? What if the gym does not finish? So yeah, there's no assurance onto it. Okay? So that's why we should not be selling a product to a customer when there is uncertainty or there is no assurance onto it. Okay? Maser or Kimar. Maser is basically, everyone knows this. From the first day you step into the UAE, or if you are Muslim, you would already know that gambling is prohibited. Yeah? Any game with money involved is already a haram transaction. So it is not allowed with us, okay? Are prohibited and forbidden and considered haram in the eyes of Islam. Okay? Now, Islamic banking helps us meet, what you call this? It's not, how do I say it? In Islamic banking, or in Emirates Islamic, we are not only governed by one. Yeah? In Emirates Islamic, we are governed by two. When I say governed, handled, okay, by two. What is this?
Sharia compliance.
Sharia compliance and central bank. Central bank. Okay? So that is why the reason we are not solely only on Islamic. Okay? So when I say we are not solely on Islamic, it is not 100% Islamic. We are still business. Okay? So it's like 90% Islamic. We follow the Islamic law, Islamic ruling, but still that 10% is still a business. So that's why the Sharia committee's job is to mitigate and check which are the transactions that are halal versus haram. Okay? But we are still business. That 10% still goes to the staff. We need to get our salary. We need to get payment for this training. We need to get, bills. Yeah? So because some of your customers will ask you, profit, haram still, right? It's still haram, profit. Yeah? But the customer needs to understand the reason why we're still having a profit is because we are still a business. We still need money to have salary for us to provide service. We give service. Okay? So that's where the profit goes to. Alright? Now, here's a video of introduction to Sharia.
بسم الله الرحمن الرحيم. السلام عليكم ورحمة الله وبركاته. Welcome all of you for this session of Sharia induction and introduction to Islamic finance. My name is Dr. Omar Al-Addin. I'm from Sharia Control Department within the Emirates Islamic. Inshallah, within these few videos and sessions, we will explain in details the importance of Sharia and understand what does mean by Sharia and the Islamic finance. Also explain what the difference between Islamic finance and the conventional finance. After that, we go in more details for the products. What do we have within Emirates Islamic? Mainly we'll talk about Murabaha contract. Murabaha is a sale contract, so we'll explain in details. After that, we'll go in our products such as product finance, credit cards, and other products. And finally, we'll have a session to explain about Sharia governance framework. Within these videos, inshallah, you will get a basic knowledge for Sharia, which will help you to do your business and do your work in the best way. Now, Islamic finance has started almost 1975, when we have the first Islamic bank established in UAE. And this Islamic finance different from other type of finance or different from other type of banking, what we call conventional banking. So the Islamic finance in define is a banking follow Sharia rules and regulations. So when we have a normal banking, comply with the Sharia rules and regulations, we call it Islamic banking.
Okay, now here's the history of Islamic banking. I want you to watch this carefully.
History of Islamic banking. The development of the Islamic banking industry is moving at a fast pace, and almost every country now has some form of Islamic financing. From a humble beginning to the size it is now, Islamic banking went through 3 different stages. Stage 1, system evaluation, 1920s to 1960s. In the early 1920s, Islamic jurists in different parts of the world started evaluating the conventional banking system. It was concluded that the basic contract in any conventional banking system is simply borrowing and lending money against author interest. During this period, the banking needs of Muslims communities were limited to depositing funds or issuing checks and demand drafts. So prominent and visionary Islamic jurists issued fatwas, juristic rulings, for Muslims on the subject of dealing with interest. With no doubts, such individual efforts helped Muslim jurists in the coming years to arrive at the conclusion that borrowing or lending money against author interest is nothing but riba, usury, which is a serious sin as per Islamic teachings and beliefs. Stage 2, first efforts, 1960s to 1975s. During this period, modernization of economic activity in Muslim countries demanded further sophistication of financing transactions, which was heavily dependent on conventional banking systems. Notably, Dr. Ahmad al-Najjar established Mekana Saving Bank in Egypt in 1963. These micro-level efforts succeeded in introducing banking institutions free from interest through participation in the trade transaction, but the real demand of having full-fledged commercial banks which will function in compliance with Sharia remained largely unmet. Stage 3, actual implementation 1975 till date. In 1975, Islamic Development Bank, IDB, was established in Jeddah, Saudi Arabia, as world's first development bank which, till date, functions in compliance with Sharia principles. In the same year, Dubai Islamic Bank was established as world's first full-fledged commercial bank. Under the guidance of Sheikh Zayed, UAE was world's first country to enact a dedicated banking law for Islamic banks, which was effective from December 1985. In October 2013, Sheikh Mohammed bin Rashid started the initiative of making Dubai the capital of Islamic economy. This has given a real boost to the industry we're in. Sukuk worth billions of dollars were issued by UAE's exchanges, as well as launch of Nasdaq Mirabaha platform. The trend of establishing new Islamic banks is continuing to inspire many shareholders all over the world, which resulted in advancement of Muslim communities through availing dynamic and different solutions of financing and investments.
Everyone watched?
Yes.
Really? Alright then. So in which year was the world's first full-fledged commercial bank was established? How many of you says it's 1975? How many of you says it's 1985?
1985 in Dubai.
Dubai Islam.
The answer is
75.
world's first full-fledged commercial bank was established. I'm talking about established.
Established was 75.
75.
And
Started operational 85.
let me go back. So in 1975, IDB was established in Jeddah, right?
Yes.
As the world's first development bank. In the same year, Dubai Islamic Bank was established as the world's first full-fledged commercial bank. Okay? But it was effective on December 1985. So the answer is 1975.
One question. was registered as a, started as a commercial bank in 75, right?
Yes,
But it went Islamic in 1985.
it was effective. Okay,
Earlier it was
like the implementation of it, of everything, was on December 1985. Okay, but it was like initially established when, you know, like the totally created thing on 1975. All right? Now, here are the basic blocks of Islamic law. When I say basic blocks, the haram, the avoidance. Okay, the Sharia fundamentals. All right? First off, of course, is riba. But before I show you this, and I want you guys to watch this because it's really good to watch most of these videos. Why? When someone asks you, I already have ADCB, what makes your bank better than my bank? I already have Mushrek, what makes your bank better than my bank? Right? Your customers will ask you that. Yeah, besides what if they tell you, oh, because of the features and benefits. In ADCB, I have 15%, something like this. In Emirates Islamic, you only give 10%. So what makes your bank better than my bank? How are you able to answer that? You're able to answer it because of our contract, our murabaha, and the leniency of the Bank of Islamic Law. Okay? In Emirates Islamic, we are a profit and loss sharing bank. Okay? If, for example, I took a personal finance with Emirates Islamic, yeah? And I say, hey bank, unfortunately, I'm not able to pay it back within 2 years. Can you please help me? And because of the murabaha, the bank will check your payment history and everything, and technically they will agree because of the murabaha. So they will say, okay, you can go ahead and pay it back within 3 years. And you do not have to worry about the profit because the profit will remain the same. But if you do that in a conventional, what will happen to the interest? It will be higher, right? Because in a conventional banking, the longer the tenor is, the higher the interest gets. Yeah? And that's what customers does not understand. Yeah? So that's one way of selling one of products. Yeah?
Islamic banking,
What?
profit is not fixed. Islamic banking, commercial banking, the profit is same.
No.
Other way around. Other way around. Profit is fixed. Okay? Except for the products that we have a reducing rate. Okay? But technically our profit is fixed. Okay? Except for the ones that we have a reducing rate. Okay? But with the conventional banking, and conventional banking can go super higher or super lower. Not super lower, super higher. Now let me give you another example. How much is this water in a market price?
1 gram.
Wholesale market price. Let's say 50 fils, right? 50 fils. But since I'm in a hotel, mashallah, I'm in a hotel, I get the water, I buy a water. How much will this cost?
2 gram.
5, 10, depending on the type of water, depending on if it's bottled or not, right? So it can reach up to 10, 15 dirhams. Sometimes the bottle is 25. Yeah? So basically, since I'm buying it in a hotel, it has an interest on it with plus the services and everything, yeah? So it's high. They will set it high. Now if I go to, let's say, Wesso, New Era, the green grocery, how much would this cost? 1
1
dirham
gram.
or 1.50 or 1.25, right? Out of market price. Now that's the profit of that grocery. Okay? It's a business sense of profit. So in order for that cost for that owner to have something to use as a payment for the electricity, as a service, as a, to buy again another water to sell again. Yeah? Because they're still business. Similarly to us, we're still business. Okay? It's not a charity. The bank is not a charity. Okay? Okay? However, we do deal with charity. Now, how do we deal with charity?
Whatever interest rate that they will get, you have to pay.
No.
No?
Late payment and fee charges, they all go to charity.
Exactly. Late payment. Okay? Whatever late payment the customer does, it will go to charity. That's why we do not call it, we should not be calling it late payment. The real Sharia compliance terminology is commitment to donate. Okay, the wording is commitment to donate, which I will show you guys the actual terminologies. Okay, now the question is that 100% going to charity or yani 50-50? 100%? Yes, it is 100%. All of those late payment charges goes to the charity 100%. Not even one dirham goes to the bank. Now people will say, how will the bank earn? Right? We earn from minimum payment or profit. Yeah? Profit still. That's how we earn. Okay? Now, riba.
What are the main fundamentals of Islamic banking? We'll see within these four main fundamentals that we explained. The first one is riba. So when you say the word riba, this word is very old word and used for ages. But now in the conventional days, we use the terms of interest. So riba, or Arabic we call it faida, which is usually came from the loan. So the first one is prohibited in Sharia or riba, and based on our many sources of Sharia, called from the Quran, Allah say, حل الله البيع وحرم riba. And there's many ayat explaining that, and also many ahadith explaining that riba, it should be disallowed, it shouldn't be available within our economy. Riba is happening when we have loans. So, if, let's say we have A giving loan to B, giving 1,000 dirham as a loan for 1 year. After 1 year, B should giving back this amount to A. And this amount is loan. So this is a qard, or the art of qard. So B should pay back this amount exactly. Any additional amount giving back to the A, it considered to be an interest. And this will be riba. For that, it will be prohibited and will not be allowed in Sharia. This amount, it could be on the fixed amount. Let's say 1,200. So this is extra 200, it will be prohibited, it will be interest, riba. Or also it could be on the percentage. It's not allowed, and it is considered to be interest and prohibited from Sharia. So that in loan, only the way to accept the loan in Sharia, to give the loan and receive the exactly amount without any additional amount or percentage going back to the one and to the lender. That's the main concept of loan. Now, so in Islamic banking, we do have loans without interest. Only when we apply loans, we have without interest. But the loan concept and the loan contract, usually in Sharia, we use it for social help, for helping others, for social benefits for people, supporting some people. It is not for making money. We don't create money or return or profit from the contract of the loan. We have many alternatives. We call it training. This is trade contracts. Trade contracts, we do have a lot of contracts, variety of using of contract that we can apply, such as sale contracts, buying something and sell it, something like renting, buy something and rent the benefit of these assets. We do have something called partnership. I enter between me and you in the contract that will be in the running the business, and we share the profit and we share the risk. So we do have a lot of contracts can be applied, and this contract will generate the profit. So as a bank, we don't have any type of loan with the interest. We have trade contracts with with a profit. So we do have different type of sale contracts, especially for example, in Murabaha, and that applies in different of type of contracts and the products. For example, auto financing, the home financing, also for the credit card, personal finance, all type of finance. We do have finance, we don't have loan, we don't have auto loan, we don't have home loan, we don't have personal loan. All that is not available within Emirates Islamic or any Islamic bank. What we do have financing, because when I say financing, we use different type of trade contract. We don't apply the loan contract. This trade contract is came with a profit. For that, when I'm giving the auto financing, I will tell you that this is the profit rate. Personal financing, this is profit rate. So I explain to the customer, or I'm understanding that this is a profit rate, it is not an interest rate. It should be clear that these two big differences, and inshallah within our sessions, we'll get more in details how we apply personal finance or credit card or auto finance or other type of financing using the trade contract and using the profit, not loan with the interest. That will be within our session, inshallah.
Okay, so like he said, now you need to know the difference between loan and finance, between riba and interest, or profit versus interest. Okay? And here are the fundamentals or the prohibition.
Now, the second fundamental the Islamic banking talk about gharar. Gharar in Sharia, which is known as uncertainty. So, if we have any contract, it must be following the requirement of this contract and should be full of details to ensure that both parties, for example, the sale contract, we have the seller and the buyer. So both parties, they should have the details of the contract. Let's say I'm trying to sell you my car. And before I'm selling this car, I told you only 10,000 dirham. And wow, said you nice good deal because it is a new car, very nice, and only 10,000 dirhams. And after that, on the day of want to exchange, I bring my old car. I told you, okay, this is the car. I said, no, I thought you bring the new car. No, my intention is to bring my old car because I have the two cars from the home. So here we create dispute. Here because there is no certainty on the contract. For that all our contracts with Islamic finance, it must avoid any of uncertainty. Uncertainty could be on the price, could be on the item descriptions, could be in the what you call the statement between the customer. So it must be details of the information provided to the customer, mainly when we provide the information about our product, about personal finance, about credit cards. We should provide them with full of information that help them to understand, okay, what is this product, what is the profit, all these details. We are not allowed to hide information which lead the customer to buy these products or not. Any hiding of information, it's considered to be gharar considered to be one of the cheating for the customers or wrong action within Sharia, which we should avoid. Now, the third fundamental of Islamic banking, we do have a few types of items, products are prohibited in Sharia. These items such as alcohol, pork, anything is related to these things which is Sharia said it is not allowed to do any business with this. For that, as Islamic banking, you are not allowed to enter any business, to do any transactions, support any type of financing of all these transactions related to or alcohol or something not allowed in Sharia or illegal products. These for products, also for activities, we do have some of activities also not allowed, like gambling, casinos. This type of activity also not allowed. We are entering with this business. So any transactions entering to this activity or this product are not allowed, and Islamic banking avoiding all type of transaction within these items. Number 4 of the Sharia fundamentals, we have to apply the contract requirement. What do you mean by apply contract requirement? Remember at the beginning we said that instead of having loan with the interest, we do have different type of trade contracts. When I say trade contract, we have a lot of transaction, a lot of contract we apply, and the most famous one, the sale contract. This contract having requirement or having pillars. We do have first the contracting parties, the seller and the buyer. So when I say the contracting party, the seller and the buyer, they must have the eligibility to do the transaction. They must have certain age, they must own the asset, they must have, own price. They have, there's certain requirement for the seller and the buyer to do the transaction. The second, when I talk about sale contract, we do have something we call the subject matter. What I mean, the item itself, what you want to sell, your car, home, house, you want to sell goods, products, any products. So this is the products. Also, it has some requirement, as I explained. It should be halal, shouldn't be available, should be existent, should be owned by the seller. This is for the requirement of the asset or the product itself. Once you have product, you have also the price, the money. So the money that you provided also it has to be clear, know that how much the price, in which currency, all the details of the price of the items. So this is to the item itself and the price of these items. And finally, we have something called the statement. Statement, which means I said, I'm selling you this car, and we said, I accept the car. We call it the offer. Coming and will be the acceptance. So it should be offer from one side, and the other side will be accepting this transaction or this sale. Also, it has some requirement to ensure that it's clear for both parties, mutual agreement between both parties. This is we call requirement for a contract. For that, every contract, it must have its own requirement. If we talk about renting, so we have the lessor, the lessee, we have the rental, we have the asset. If we have partnership, we have two parties. So we have to ensure these contracts fulfill the requirement, the detail of that, to ensure it is Sharia compliant. Not only avoiding riba and other things, we also apply these requirements, because any mistakes here also it will make this contract invalid and make this contract not Sharia compliant. These are the basic of Sharia requirement to ensure our Islamic finance following Sharia rules.
Okay, let me show you this one first. This one. Okay, so these are the other prohibition as well that should be avoided. Okay? First, of course, you guys already know riba. The other one is jahala. Jahala means ignorance. Okay? It can be about anything. Like literally anything. Any ignorance involving in it, we cannot sell the product to the customer. Why? Customer cannot claim that I don't understand you. I cannot understand you. Okay? I don't want to understand you. If the customer says that, you cannot sell the product to that customer. You do not sell the product to the customer. You do not force the product to the customer. Why? Because it will lead to garar. It will lead to garar, which means uncertainty, and you will have a dispute later on. Okay? It is a headache for you and the bank. If the customer does not understand what you're selling them or does not understand whatever you're talking about to them. Okay? Transparency should be there. Alright? All of the policy, all of the features, benefits, terms and conditions are all applicable on the website. Okay? You just have to show them where to find it, how to find it, and they should understand it. If they go ahead and read it and they do not understand it, it's your obligation or responsibility to explain it to them. You do not need to say A to Z, but you need to show them where to find it and how to find it. Okay? For example, where can we view the KFS? Key fact statement. Key fact statement is the first document that you should be giving to the customer, regardless even if it's on the TBK or tablet banking or on the manual forms. The first document that you should be giving to them is the KFS and not the application form. Why? Because terms and conditions are there, warnings are there. It's both in English and Arabic. If you provide the KFS before you meet the customer, before you sign on the TBK, the customer can no longer come back to you and say, why do you have a hidden charge? Why you did not explain this to me? So that is for your security. Providing KFS before you meet the customer, seeing the KFS on the TPK, which they have to acknowledge, by the way, with the means of tick mark. And the other one is, KFS is also sent via email along with the offer. Yeah? So those four, it's so impossible that the customer cannot claim, I did not read any of those KFS. Right? So the customer now cannot come back and say, why do you have a hidden charge? Why did you not explain this to me? So that's your security as a sales staff. Okay? So you make sure that all of those, you provide the KFS in the beginning. So none of this garar or jahala will happen. Alright? Exploitation is basically taking advantage of a person's lack of knowledge. When someone says, I don't know how to use a credit card. Okay, ma'am, sir, it's a free money. It's a free money. There's no such thing as free money, right? When it's a money against a credit card, they still have to pay it back. Yeah? There's no such thing as free money. Yeah? So you just have to explain to them. You do not take advantage when they do not know how to use a credit card or when they do not know what a credit card is. Okay? Kimar and Macer, gambling. Haram. Prohibited. Haram transactions. What do we consider as haram transactions? Like what Dr. Amar said.
Payment on bar.
Payment on bar, you cannot use, thank you cannot use our card, regardless if it's a credit card or a debit card, to a bar or in a bar, and you purchase alcohol itself. You can go to a bar and buy food, but not alcohol itself. Okay? When you go to West Zone, New Era, buying pork, using our card is not allowed. Alright? If you also buy other food, then what the cashier is supposed to do is they're gonna separate the transaction. Okay? You can use the other halal foods with our card. And the pork specifically, they're gonna allow you to either use another card or pay it by cash. All of the restaurants, all of the groceries are already aware, and they give the list that are haram transactions in their grocery and give it to already Islamic. So they already have this communication. Okay, so Sharia or Islamic, these are the lists that are haram with us. These are the lists that you should be monitoring that cannot be used by our cards. So they already have an agreement. All right. So it's either because the cashier will already decline the card, okay, or you inform your customers that they are still not allowed to be used, or there are some instances that it will go through, 1, 2, 3, it will go through, it might go through, it can go through, but then again, if the bank see or saw that there are a misuse in the card, like you often purchase those items using our card, even if you already got a warning, or even if the cashier already declined it, but still you're using it to buy tobacco and stuff like that, the bank has the right to automatically close the credit card and debit card in accordance to general terms and conditions. Okay? So there are only, let's say, 3 things or 3 reasons why the credit card or the debit card gets blocked by the bank. One is because of the Sharia transactions, haram transactions. Second one is due to KYC. And then the other one is transaction monitoring. Okay? Those are the probable reasons why the account or credit card gets blocked, frozen, or closed. But I want you to keep in mind also this one instance, that the credit cards that you guys are sourcing can have a second ECV randomly. What is ECV? Employer call verification. What do we do on ECV? They're gonna call the company and recheck if your salary is really this much, if your position is really this, and so and so. Now, why do they do a random second ECV?
Check the customer is getting provided service, whatever service they are going to check everything.
And if in case the salary of 5,000 did not hit the account, okay, or they really somehow saw that the salary is not really 5,000, then they will do a random ECV. And if the owner itself said, no, the salary of that person is 4,500, it's not 5,000, then the credit card will be closed automatically. And if there's any outstanding there, you have to pay it. But you can no longer get a product from the same bank. Okay? So those are random checkings as well. Okay? Those are also considered as transaction monitoring. Alright? So those are the reasons why we get our cards or your customers' cards get automatically blocked or closed. Now, this one you can take a photo of this. This is really good actually to know. This one came from Sharia team itself. So it says here, please note that certain merchant codes which provides both Sharia compliant and Sharia repugnant services are open. However, any prohibited use by the customer will be their responsibility and they will bear the consequences. If it's proven to the bank that the customer misused the card, then the bank has the right to cancel the card in accordance to the general terms and conditions. And these are the, the top 10 list of the haram transactions. Alright? So this is actually pretty good to know, so your customers are also aware and will not, wonder why my card is blocked, why my card is frozen, why I'm not able to use the card. Okay, those type of things. Okay. Now let me go back here. Alright. So in conventional versus Islamic banking, like I said earlier, riba, money on top of money is conventional. In Islamic banking, like you said, it's riba free, so we do trading concept.
Let's start explaining the difference between Islamic banking and conventional banking. So to understand how the difference, let's say how conventional bank first work. So usually we have depositors and they want to put their money with the bank. So they will give this money to the bank.
This is a really good explanation of the difference.
Then there will be a loan come from the depositor to the bank. And now,
Let me pause it one real quick. So from here, you'll understand what's the difference between loan versus per finance. What is the difference between interest versus profit? How the bank in conventional banking earns money and how we in Islamic banking earns money. Okay? You'll understand here.
will not take the money and keep it. We'll invest this money or lend it to others. So we'll lend it to we have here the borrowers. Here we have the bank, and we'll give this money, lend it to the borrowers. How the loan also here? So we have a loan from the depositor to the bank, and the bank to the borrowers. So now the relationship, as I said, it is a loan. Now what the benefit of the bank? The bank will charge these borrowers, let's say 5%. They take loans and they will charge you interest rate 5%. And the bank should give these depositors, because why depositors put their money within the banks? Because they need some return. So they give them interest rate, let's say 3%. Now, this is the benefit of the bank. Here I'm talking about conventional bank. They will charge high and pay low, so it means that they will get 2%. The difference between how much they will charge the customer and how much will earn, they will give to the depositors. The difference are the 2%, and that's how they cover their expenses for the shareholders, for the employees, for everything, and that's the benefit of the conventional bank. That's typically how the conventional bank works, receiving money, giving money, interest high, interest low, and they make money. On the other side of the conventional bank now, let's know how Islamic banking works. Here we can see that we still have depositors, people who has money, want to deposit their money. So they will deposit their money within the Islamic bank. Now, also the Islamic bank, what they will do with money, they will give it to the people because they need financing. People looking for the financing. Now, it looks similar to the conventional banks because here we have depositors, we have bank, we have people who receive money. So what's the main difference? Remember at the beginning what we have said, we don't have loan. No loan with the interest. So how the bank make money? How the bank generate income. Let's talk, we have two levels. One is here between the bank and the people who need financing, and the one between, the second one, between the bank and the deposit. Let's talk about the first one. How the bank giving money to the customer. Now let's say, there is one customer needs 100,000 dirham. The first question we ask, why you need this money? Maybe he need to buy car. Now the bank doesn't give loans to the customer. How the transaction will be? The customer will go to the bank and request for this car. This car is available with the dealer. So the bank will go to the dealer and purchase this car. So this car now the bank will purchase this car from the dealer, and the bank will pay the 100,000 dirham. In normal trade, when they do business, they purchase by low price, they sell it with a higher price. So they put some profit. So now, if the bank purchases by 100,000 dirham, and I'm telling the customer, okay, I'm selling you this car with a deferred payment. So this 100,000 dirham, my cost as a bank, and I will put some additional, let's say 20,000 dirham. So this is my cost, this is I will put my profit. And I will sell it to you, you will pay within 5 years. Your payment, deferred payments within 5 years. How much the total price, the selling price will be? 120,000 dirham. Now I agree with the customer. As a bank, I have the car, I purchase it. And second, I will sell this car back to the customer with 120,000 dirham, and the customer will pay in installment for 5 years, which is including the cost and the profit. And that's contract, we call it the Murabaha contract. The most famous contract within Islamic Bank, Murabaha contract, because why? Because Murabaha, it's type of a sale, but we have to mention clearly how much you cost and how much you profit. And this price, the 120, is fixed price. We are not allowed to change or to increase amount or decrease. Once we agree between the bank and the customer on the price, 120, 130, 140, it depends on the agreement between the bank and the customer. If it is percentage, 2%, 3%, 10%, it's not about percentage or fixed. We need to make sure at the end, the selling price is fixed. That's symbol of Murabaha. At the end of the day, now the customer get the car, the bank make profit, the 20,000 dirhams. So both get their benefit, and that's what we have alternative for the loan. So we don't have a loan, we have one of the contract, we call it Murabaha contract. We purchase by cash and sell it with a deferred payment with some additional profit. So now, how is the bank dealing with the depositor? Now, we have one contract called partnership. What does it mean, partnership? Meaning that the customer, we have the customer and we have the bank. The customer provides the cash and the bank provides what we call the effort and the expertise. And how much profit we make? Let's say 70% will go to the bank and 30% will go to the customer. So we share the profit, how much we earn at the end of the year between the bank and the customer based on contract called Mudaraba or partnership. This Mudaraba, so we share together the profit. And that's why the depositor sometimes we get 3%, 3.5, or whatever, the percentage should be high or low. How much the banks at the end of the year, the bank makes 10 million dirham, for example, based on this financing. So they will share this amount between the bank, let's say 30%, 40%, whatever, I mean, the percentage. Let's say 30% or 3 million will go to the depositors, and 7 million will go to the Islamic Bank. Thus, explaining the difference between Islamic banking and conventional banking.
So with conventional banking, who always wins?
Bank.
The bank. Yeah? So the bank always wins. Here, in Islamic banking, it's always a sharing. Okay? If the bank loses, the customer will lose. If the customer loses, the bank will also lose. Alright? Now here are other couple more examples of the difference between conventional banking and Islamic banking. So you guys would have a lot of ideas, a lot of ways for you to explain it to your customers. Okay? Now before I go ahead and play this video, yes. So what I want you guys to do is, I want you to grab food, coffee, stretch a little, and come back after 15 to 20 minutes. While you guys are eating, I am going to play the video. Okay? Yeah? Alright, go ahead.